everyone. I'm Key.
And I'm Teddy.
And you're listening to The Listing Lounge.
Welcome back, everyone. Today we have a very special episode for you. We're going to be covering the financing part of purchasing a home. And we have a very special guest, so we're going to go ahead and let him introduce himself.
Hey guys, good afternoon. My name is Jeremy.allen. I'm a senior loan officer with Novus Home Mortgage here in South Charlotte, North Carolina. I've been in the industry for about 12 years now, and so I'm excited to be here. So thank you guys for having me.
Thank you for coming.
Yes, thank you for coming.
Yeah.
So we're just going to go ahead and dive right in.
Okay.
Yes.
I know people have a lot of questions about mortgage rates and what the market looks like. So we want you to tell us a little bit about what the current state of the market is. But don't get too much because we're going to get into predictions later on.
Okay.
Yes.
Okay. It's interesting. I mean, I tell even my colleagues right now, it's kind of like predicting the weather with the market. We could tell our clients and you guys one thing 1 minute, and then the next minute it can flip.
Yeah.
But overall, I think we're seeing some interesting market roller coaster rides is what I would
That's
call
a good
it.
description.
I think we were predicting at one point that the mortgage rates would drop before the end of the year, and then, like you said, we'll talk about some more of that stuff later. But long story short, rates did not do what we thought they were going to do before the year's over with. So right now, it's a little struggle. It's a little tight, and I think everybody's feeling that on top of the economy too. So it's a lot going on with the market right now.
Interesting.
Yeah.
Interesting. All right, so now that we have that forecast, let's go ahead and go into one of the questions we have.
Okay.
What common mistakes do you see prospective home buyers make that can delay or derail their mortgage approval process?
I'm gonna try to pick the top three because there's a lot.
Okay.
So I would say first things first is credit. When you're going to purchase a home, it is very important to know that once you start the loan process, your credit is almost my credit. And what I mean by that is I can monitor whatever you do in your credit from that time being. So if you are going out because it's Black Friday and that couch is on sale, but you're in the middle of that home loan process and you get your credit pulled, I'm going to see it. So I tell people to avoid doing anything with their credit while they're in the process because it can hinder, it can change your debt to income, it can change a lot of things that we have already probably accomplished and moved past by you doing things like that. Secondly, I would say savings. Savings is actually my number one. And for me, it's because no money is more powerful than your own. You can leverage, you can figure out what you want to do and how you want to move as far as down payment, as far as closing costs, as far as rate buy down, all with your own money. Now, there are other alternatives, but the number one thing is if you can come to it with your own money or a gift from family, something to that extent, then it makes the process a lot easier on them and myself, honestly. And then thirdly, I would understand that the first home isn't your forever home. We got to go into the mindset with the plan and understanding what you want to do with that house.
Yes.
But that house doesn't have to have 10 things on it, or 10 out of 10 things
That's
that
a
you
good
need
one.
on
Yeah.
the house. If we can find something and collaborate with you guys that gives you 7 things that you needed, and it may be 2 or 3 that you couldn't get, understand that that's a process too, and that you're not going to stay in that house the first time.
That's actually one thing that we tell our clients too. Your first home might not be your forever home, and that's okay. You have to start somewhere, and when you go into purchasing a home, especially your first property, you kind of want to think of it more from an investment standpoint, even though you're going to be living there for a little bit. Think about the things that you can do down the line. Think about how you're going to be building equity. Think about maybe you can rent the home out later at another time and get another home. That will be your dream home. So you just want to keep an open mind when you're looking for that starter home.
Right.
Yes.
Exactly.
And you mentioned something interesting I think a lot of people don't know about is that gifting.
Yes.
So, talking about gifting, can you give a little bit more on that? Like, what's the max amount that someone can receive for gifting?
Yeah. So it depends, and it depends on the loan type that you're doing as far as a gift and stuff like that. But typically, and to understand what a gift is literally like a family member, close relative, or something like that may be in a position to give money towards your down payment or closing costs, etc., to help you with that loan. Gifts, we love them because it's easy. The money's there. We don't have to do an application for the funds or anything like that. And honestly, even most recently, they've gotten a little easier about how we need to paper trail the gift. At one point, and in some instances you still do, but sometimes you don't have to have a full transaction history report from, let's say, mom. Mom gave you $10,000. You don't have to have a full bank statement from her. In certain instances, it could just be a wire transfer and a receipt from her account to the attorney. So there's ways to try to make that easier. And we also understand that every family member doesn't have that money just to be given out. Another idea why you brought that up is the 401k. A lot of people don't know about that. There are some, not all, there are some 401k programs that will allow you to withdraw from it without a penalty as long as you're purchasing a house. And so those things are what we kind of discuss on top of what you just said a minute ago about just kind of getting an idea of what your idea is for this first home. You know what I mean? Typically, most people stay in the house between 2 to 5 years. Something changes. A life event changes within that time frame. Either you get married, you are single, you have a family. And so the house may not work for you anymore. But that's, again, I'm sorry to get back into that. But that's that motion of what we're looking at when we talk about buying a home. But as far as the gift and stuff like that, typically 3 to 6% sometimes is what we see. As far as a cap, I want to say it's 3. But that's typically how the gift works.
That's
3
good.
to 6%. Before we go into our next question, I want to go back to the credit thing. Is there like a minimum amount that someone can spend that they'll still be like in the safe zone, or should you just avoid major purchases
On credit?
all? Yeah.
Have that conversation with me first.
Okay.
Here's what I'll say. And here's what I'll say
Yeah.
that. I don't encourage it at all to do anything with your credit. However, if you're in a position where your debt to income ratios are not something to be worried about, i.e. your car breaks down and you don't have a choice but to buy another car, come talk to us first. A lot of people feel the need to become, or they get fearful of telling us, kind of as if we're not going to know. But again, behind the scenes, they don't know what we can see and how often they pull things. And so if you're in a dire need of a situation like that, that's a little different. Come talk to me first. We'll figure it out. I can kind of go into the system and kind of forecast what that actual payment would do to your debt to income. And if it's okay, we might can make it work.
But I'm glad you
But
said
I'm very
that.
hesitant to say that because,
Yeah.
you know, on the flip side of it, it's not necessarily the cars are breaking down of that. It's people wanting to buy furniture. It's people wanting to do the washer and dryer because, you know, Best Buy got to sell this weekend. Those are the things that we see. And it's not necessarily their fault because ultimately they're trying to get a good deal to go for the house.
Yeah.
You know, they're trying to get their appliances and everything together. So we understand it, but don't let the washer and dryer be the reason why you can't get the house now.
Yeah.
You know what I mean? In that instance, it's forced credit.
That makes so much
That
sense.
makes a lot of sense.
And
Yeah.
I'm glad you said that because you're letting people know it's okay to come to you.
Yes.
You know, essentially you're like a counsel.
Yes.
You're trying to help them get to the goal. They're not going to report you and say, oh no, you're going to get arrested
Right.
or you're going to go in timeout
Yes.
or whatever the case may be. Reprimand it for the fact that you have this situation going on or you may have this desire. They understand your desires and what your goals may be, but they want to make sure that they're still getting you to the finish line.
That makes sense.
And you can't hide anything. They're going to see it.
Right.
All right.
I tell people, listen, I'm going to be your mom, I'm going to be your dad, I'm going to be your friend.
Yeah.
We're in a relationship for the next 30 days.
Literally.
Ultimately, because at the end of the day, my job is to get you to the end of that table with those
Yeah.
keys in your hand. So if we can do anything to prevent any obstacles, then tell us up front so that we can game plan.
Gotcha.
I like to describe it as we're their teammates. Like
Yes.
your realtor, your lender, we're all a team. We're gonna get you to the finish line, but you have to be honest with everybody
Yes.
involved so that we can get you to your goal.
Yes.
We're rooting for you.
We're rooting for you. So the next
Absolutely.
question, we're gonna go back into savings because you talked about savings is actually your number one. And there's a really hot topic right now with down payment assistance and low down payments. So
Yes.
people want to know how can they get into a house for as little money as possible. But there's also some caveat to having a down payment assistance program when you go into purchasing a home. So talk about, in your opinion, is
Right.
it better for someone to have a good savings and focus on that rather than trying to get into a down payment assistance program?
And I like that you said it like that because I'm going to preface and say this is my opinion. This is
Okay.
my opinion. It's my word, right? I have done a lot with down payment assistance programs between North and South Carolina. South Carolina Housing, North Carolina Housing Finance Agency, House Charlotte, and Livian, all of them I've kind of touched in some capacity. I love the products for the right situation. Every situation isn't a down payment assistance product. The problem with it is people hear money and everybody wants to jump on it with due reason, because if you're a first-time home buyer, you don't have a lot of information on how those products work until you talk to us. So all you hear is, oh, they're giving $15,000? I need to get that.
Yeah.
Which I would too. Right? Give me that. So But the educational aspect of it is what is really the obstacle with you as far as the savings, and do we really need to go after that money?
Right.
If we do, we all know no money's free money. So it is saying $15,000, but to give you an example, North Carolina Housing Finance, I use frequently, so I'm not talking anything against it, but to be clear on how the process works, they offer a $15,000 program, but the origination fee that's separate from ours as a lender is already 1% of whatever your loan amount is. So if you take a $200,000 house and you're there, then 1% of that is already taken out of the total of the 15 grand.
Wow.
And so we're not really at 15 grand anymore.
Yeah.
The second part of it is you got to understand that by you taking that money, that is a lien on the home. And what I mean by lien is you have one mortgage, which you come to me for, you put your down payment assistance down, and that is your first mortgage. Any lien or loan outside of the first mortgage payment is a different lien or a different loan. It is a silent second lien on your house. You have criteria to meet or obtain or keep in order to oblige by the contract that you signed with that program. For example, some of them make you stay in the house for 15 to 20 years. If you do not, you pay that money back. Some of them make you prorate it back, some of them don't. So it really just kind of depends on what your goal is. If you plan on staying in that home for a period of time, and I think age has a lot to do with that too.
Yeah.
If you plan on staying there for a period of time, then yeah, it might make sense. If you are in a situation where you have to get a home and you do not have any money in your savings account, yeah, it may make sense. But just know getting into it, what you're getting involved with, because it's not just $15,000 slapped on some piece of paper and you're good to go and it's done. It does not happen like that.
Sounds nice,
yeah.
but
Right.
you know.
Read the fine print.
Read all the fine print. And if your
Yes.
loan officer is really good, he would have read it with you to make you understand what you're getting into. And as long as you sign on it, then we're good to go.
Yeah.
I just want to make sure that they're aware of what they're getting into. But ultimately, like you said, savings is the number one thing. You can maneuver and structure your money better than any program can. If you want to say, hey, I want to take $10,000 right now and buy the interest rate down and then take another $5,000 towards my down payment or something to that extent, you have a better combination of being able to use your own money versus someone telling you, well, it's because it's their money, technically. It's yours, but it's theirs. They're telling you what to do with it.
Yeah.
Yeah. And I would say the last thing with down payment assistance that I think people need to understand is it takes the loan officer's hands off of the product to a certain extent. And what I mean by that is, for example, interest rates. Once you go through a down payment assistance program like North Carolina Bond or North Carolina Housing, they regulate the interest rate. We don't have any control over it. It's not like you can buy it down. They set the rate, and whatever that rate is, it is what it's going to be. Now, fortunately, in this market, because of the rates being so high right now, their rates are actually pretty competitive.
Yeah.
So we're kind of in the same window span. So you're not losing by getting in or thinking that you're going to get a higher rate, because honestly, they're probably about neck and neck right now.
And I'm glad you're talking about North Carolina Housing, because that's one of them that we have in North Carolina. They also have Charlotte Housing,
Yep.
but they're different.
Yes,
They're
two different programs.
So can you speak a little bit more on the difference between the two? They're there for assistance. However, one is, they say, is stricter.
Structured.
Or structured.
Structured
Structured
different.
than the other.
Yeah, two great programs.
Yeah.
Right. One is more of an educational concept.
Yeah.
House Charlotte, and forgive me because they changed the name. It's not House Charlotte anymore. I cannot remember the name. Dream Key. Dream
Yes.
Key. Yep. Dream Key is a great program. I have done a lot of first-time home buyer workshops with them, and that is their focus. So they're not coming in and giving you this money and just saying, here, have it. And not to say that North Carolina Housing is, but the difference is you have to go through steps with Dream Key to obtain the money. That means first-time home buyer classes. That means like a financial counseling session with one of their counselors, actually structuring things. And it's almost a gift to us, because by the time you get done with all of that, a lot of that file that they have used to kind of develop things is what we needed anyway.
Yeah.
So it's like, okay, all right, well, you kind of got yourself together. So that's the biggest difference between the two. You get money. Dream Key has several different programs within it. One that a lot of people are familiar with is CPLP. That is the one that usually gives you the most down payment assistance money, or potentially, within Dream Key. And then they have other programs too. So the programs are the same as far as the funding, but the counseling is different between North Carolina Housing and Dream Key. You get a little more education in getting into it before you start that process with Dream Key.
Gotcha.
Yeah.
Thank you so much for that.
Yeah.
So leading into the next question, one of the other big topics that a lot of people like to talk about is equity.
Mm-hmm.
Equity. Everyone loves equity. They
Right.
want to get the most equity,
Right.
etc. But I think a lot of people don't really grasp the fact or the idea, like what equity is.
Mm-hmm.
So can you speak a little bit more on that, and if there are any loan products that can help propel people to, I guess, put them in a better position to
gain some
have
equity.
the most?
Yeah. So the breakdown with equity is first. Equity is literally the difference between the value of the house and what your loan amount is. So if you bought a house for $300,000, but it's worth $350,000, you got $50,000 in equity. Now a lot of people think that's my money. It's mine. It's mine. The only way to tap into the equity is to refinance the house or sell it. There is no other way to really get access to that money without one of the two.
Yeah.
Ways to generate equity as a first-time home buyer are a couple of different things. The first thing I would say is, especially to the new homeowners who want to buy new, look at the neighborhood.
Yeah.
Look at the area.
Yeah.
What's growing in that area? If you can get into a new build, not the new builder or lender, but the new build. But if you can get into a new build and you see that neighborhood is, let's say, in phase 1
Yeah.
and phase 2, and you guys know this, by the time they get to phase 4 and phase 5, that same house is higher down
Yeah.
the road than what you spent.
Yeah.
So if you have an opportunity to get into that neighborhood early, that's one way to immediately get some equity on the house. The other one I would say is negotiations, and that's gone, you guys master that part. The market plays a huge factor in that right now too. So we're not seeing as much. We're seeing a little bit of play in the purchase price from where they end up selling it for. And so that's another idea. Another one would be maybe renovations, cabinetry, pool, changing the color of the home. Those things kind of change and increase the equity in the house that you've purchased. I would honestly say another reason or another easier way to gain it is making biweekly payments on a mortgage.
Smart.
If you make biweekly payments on a mortgage, it cuts your term down to a certain amount of time, and I can't remember off the top of my head what it was, but it cuts your term down. So you're getting more principal into the home, and you're paying more into it, which then in returns lower the price of the house. So knowing that you're not going to be in the house for 30 years, at the end of the day, when you sell it, that money is still applied to get you to, or you'll get that money, when you sell it too, as far as the equity is concerned.
Yeah, absolutely. I think the equity piece is also another important reason that people should think a little bit deeper before they sign up for down payment assistance programs. Not to scare people away from these again, but just educate yourself and think about your long-term goals, because if you have to sell the home for some reason, you might have to sacrifice some of your equity because you can't sell the home at a certain price due to the restrictions in your down payment assistance program that you signed up for before you purchased. So just think about all the different factors, consult you can always reach out to the realtor that helped you purchase the home, talk to your lender, and we'll help you come up with a game plan.
Yeah,
Yes,
absolutely.
Absolutely. So we are in Q4, okay?
Where does time go?
We drug the
Crazy.
We are here, yes.
We are here, and
Yep.
everyone kind of like dreads Q4 because they say it's slower generally within a Q4. But in your perspective, what do you think is the best time to purchase? Wintertime,
That's a good
spring,
question.
fall?
I personally think it's winter, fall time, winter time. And here's why. It's a double-edged sword because there's not as many houses on the market at that time as you say summer. Summer, I would say not even summer, I would say maybe from March till about August, September-ish is what we call like buyer season, right? You are in the pool with a lot more people at that time. If you go towards the fall or winter time, you count out a lot, primarily families, because they don't want to move kids in school right at the beginning of the school year. That's just one example. But you have a better chance, of a negotiating purchase price, finding a house that may have sat a little longer on the market, and then rates. Well, we can't really say, but you got a better opportunity to kind of, in my eyes, feel like you get a good deal during that time versus the summertime. This year in general, I don't think anybody felt like they got a deal on a house, like a steal. Like you think about 2 or 3 years ago, people were getting $30,000, $40,000 more than what they asked for the house.
The Wild Wild West days.
It was. And even before that, it was the opposite, right? So people were negotiating and getting $20,000, $30,000 off the house.
Yeah.
Those days aren't here currently, but I feel like if we want a taste of what some sort of negotiation, some sort of flexibility, or a little bit of ease, it would be better to buy fall, winter time.
I would agree with that. I
Yeah.
think that's a good answer.
Yeah.
Yeah.
And then look at it like this: if you find something right now in December, you won't owe a payment till February. So that's another caveat to it. You can play with the payment of what you're doing. Then there's Christmas. You don't have any.
Yeah.
Your Christmas gifts is paid for because you don't have a mortgage.
Yes.
So yeah.
Yes.
Yeah.
Yes. Thank you so much for that. I guess just to give you guys like a little bit of a bonus tip, what are some things that people could take advantage of as a first-time home buyer when it comes to around like tax time? What would you say is like some benefits or people may not be aware of that they have as an opportunity
Yeah.
to take?
Your first year you buy a house, when you report that on your taxes, you get a house. It's a credit, and a lot of people don't really know that. But it's pretty significant, and it helps out a lot, especially when it comes to everything else that you got on your tax return. I mean, as far as your finances and family and everything like that. So that's the first biggest thing. And I think overall, I'm kind of glad we brought up taxes because taxes do fluctuate within the mortgage payment. And so I know that's not the angle we're going, but it's important because people will ask, especially first-time home buyers, it's like, I've had my house for a year now. My payment changed. Like, what happened? The only thing that can change in that payment, because the principal and the interest is locked in, or that fixed rate, the only thing that can change is your taxes, right? So that's just something to be aware of when you're purchasing a home. It could go up, it could go down. You can have some changes with it, especially with your escrow account. But tax-wise, I think the biggest benefit that people don't think about is the credit that you get for a home you purchase in the first year.
You're welcome, guys.
You get some money back.
Yes.
So
Yeah.
before we wrap up, it's been a hot topic all year. I think it's just going to continue being a hot topic.
Yes.
Everyone had their predictions and what they thought was going to happen, especially with election season. I know I had a lot of people tell me that they wanted to wait to purchase until after the election. So now that the year is wrapping up and we're going into 2025, and I know you said the rates are like the weather, but if you had to make a prediction,
Right.
what do you think we are going to be looking like for interest rates in the new year?
That's tough. It's tough because, as we know, we're predicting, and rates are based off of so many elements. Primarily, they're based off what we call the bond market, and the bond market is the opposite of like stock market and those things, right? So it really looks like, and this again is a prediction, hopefully we're going to stabilize in 2025. And what stabilization looks like for us is that we're not going to see 7% in July and turn around and see 8.5% in August, and then back in September we're at 8%, and then we hear the Feds are meeting and they do a rate cut, and then we expect these things to happen, and then they drop back down. It's not that. And actually, even with the Fed rate, that doesn't directly influence the mortgage rates. They can change the things, but they directly more influence credit cards, personal loans, and those things. That's what Fed rates, when they're cutting, that's what they're really doing. But it has an influence on the mortgage. But I think in that, we are looking at some stability, hopefully decreasing a little bit before we stabilize. I always get nervous to throw numbers out, which are my prediction. But if I had to predict, I would guess that we will probably still be between the 5 and 6 range. Maybe strong 5s in a constant pace. But it's really hard to say considering right now, again, we were 6% last month, and now we're teetering between 6 and 7.5, depending on what's going on. So my hope, and I think everybody's hope, because the lower it goes, the more clients we get. but I think we're going to hover right around that. And I would also tell customers, I think we said something about the right time to buy. I think the idea behind it is I don't think there's necessarily a good or bad time. I think it's convenient to when you can jump in. There are going to be situations where you can't control the rate. Okay, cool. Can you afford this rate right now? And then can we refinance it in 6 months when rates drop? And now you have gotten the house, you've gotten what you wanted, and now we can get the payment that you want. Marry the house, date the rate. right? We
Yes.
always say that.
Yes.
So I think that would be the biggest things with that market. As we know, the purchase prices don't seem to be dropping anytime soon. I think they're going to continue to increase.
They're continuing.
Yeah.
And
One
so,
thing,
yeah.
me and Kiara, we went to continuing education the
Yes.
other day, and they said that the prices of homes in Charlotte, well, in North Carolina, have increased over 54% since
Wow.
2020.
Wow.
54%.
Wow.
So
Yeah.
definitely do not wait, because it's only going to increase. People, hundreds and thousands of people are moving to Charlotte
Yeah.
on a weekly basis.
And here's
So-
another thing. They said that we're 10,000 housing units short.
Yep.
So keep that in mind.
right. Right. That's very true. That is very true.
So thank you so much for
Yeah.
coming on.
It's been a
That's
pleasure. I
great.
thank you guys.
Yes, yes.
Yeah.
Thank you so much for one, bringing your expertise and your value to our audience. We're big on education, and we appreciate you guys for tuning in. We, again, appreciate you for stopping by
Yeah,
and giving
absolutely.
so much wisdom.
Yeah.
I'm taking the time to chat with us.
And
Absolutely.
we're going to leave all of Jeremy's contact information in the description, in the captions for this episode. So if you want to get in contact with Jeremy, you can definitely reach out to him. I'm sure he'll be happy to answer any questions
Yes.
that you have, and we'll be happy to get you into a house. So
Yeah.
don't hesitate to reach out.
Yes, and speaking of, go ahead and tell them where they can find you.
Yeah.
Yeah. So on Instagram, I almost forgot my IG. My Instagram is the Mortgage Guy, J Allen, J-A-Y Allen. My email is jeremy.allen at novushomemortgage.com. Give me an email, shoot me on social media. Licensed in all 50 states. So just let me know what I need to do, and I'm happy to assist.
And I will say that Jeremy, he's quick to respond, so you're on it. And that's one thing
Communication
that is really important, especially with the lender. You need
Yeah.
somebody that's responsive and that's always willing to answer questions. I asked you a quick question about one of my clients wanted to refinance, and he called me back in like 15 minutes. So it's
Same.
really great
I
Yeah.
to
appreciate
know that
that.
you can trust somebody whenever you need something.
Yeah.
Yes.
Yeah.
And we thank you for that too, because it is hard. It is
Yeah.
hard.
Yeah.
And we want to make sure
I've heard
that.
stories.
Oh my gosh. We're not going to get into it. We're not going to get into it. We're not going to get into it.
Yeah.
But we appreciate that so
Yeah.
much, because for one, as a realtor, as I like to call ourselves advisors, when we're taking care of our people, we want to make sure that we're headed to someone that we can trust, and
Yeah.
you have not let us down. So
Yeah,
thank you so
I
much.
appreciate that. And you guys make it easy, honestly. I mean, it's about a partnership, and it's about chemistry, even with the agent and the lender as well,
Yeah,
right?
absolutely.
So as long as I know how you guys move, and you guys know how I move, and what directions I need and what you need, then it just becomes seamless. So you guys make it easy.
Thank you.
Yeah.
Thank you, Jeremy. Thank y'all for tuning in to episode 2 of the Listing Lounge, and we'll see you in the next episode.
Bye.
Niggas want me to get ratchet. Niggas want me to attack it. Put the hood on, they're telling me cashes. Aren't you like Bob Saget? Greedy, I can't pass it. Eating everything, nigga, no fasting. I don't care how much you knew me in the past tense. I ain't no Julia Styles, this ain't no last dance. Way past it. Way